Welcome everyone to the Kendall Report. It's Sunday night, and it's another exciting day, to say the least. I've talked about this over the past several, we'll just say since the war broke out, is that it's going to be pretty much unpredictable, but maybe it's more predictable than what I'm saying, is that, there's just a lot of pressure on the markets. Before I get into tonight's broadcast, I just want you to know I have to be out of town tomorrow. Will not be back in time to do a stream tomorrow night. A very unfortunate timing, but it can't be avoided. So there will not be a stream tomorrow night. The next one will be Tuesday. Those of you in the live room, it's going to be Tuesday, Wednesday, Thursday in the live room as we come in to this coming week. So everything's switched up. Wish I could do something different tomorrow, but I've got to deal with this. So we're going to be out of town for one day. So I'll be back late, but not in time to do it. Not going to have any energy left. So let's get into tonight's video. We've had a couple things happen, right? The numbers coming out in the economy, jobs, all that stuff, everything seems to be just wonderful, but nobody is looking at that because for the obvious reasons. And we've seen oil print up to 130.50, and that's on West Texas, right? So that's WTI. It's back quite a bit off of there right now. We backed off. We're trading 124 now. So getting a bit of a spike. That was a little, I think, over enthusiastic for what's going on. But there's a number of things that are being caused by this. What we're seeing, I'm just going to get into a little bit of a mini rant here, is what we're seeing here is, just the effort by the world to cancel a country. And I get what's going on with Russia, but the oil supplies, all of these things are just being so disruptive, and that's why we're seeing these crazy numbers. I talked about this in Crude the other day, is that there's no way to tell where that's going to go. I mentioned 125, well, it did that. I don't know where it's going to go. 150, 200, I have no idea. The unfortunate part of everything that's going on, there's a multitude of things that are going to be affected. Now, I'm trying to get involved with doing a podcast to have some things I've actually been arranging with some old friends and people I know on the planet that I think we can have a conversation. So I'm planning on having more of a podcast coming in where we're having conversations. One particular individual that I was thinking about is my first boss when I became a financial analyst at a major firm. We were the largest commodity trading firm on the planet at the time. And he's an expert in wheat. And I did see an interview from him, so I'm trying to see if I can entice him to come in and do a recorded interview with me, and probably something I want to post. And the reason why this is happening, not only is crude oil obviously being disrupted and what's going on, but we're looking at the agricultural situation, right? The Ukraine is a major, grain exporter. They have a lot going on, and I can tell you right now, if they stop this thing today, you could be looking at 3, 4, 6 months before anything ships. Meanwhile, I know in the crops, I haven't done any commodity really looking at it. I'm kind of sick that I didn't, because there's probably one of the best trades out there has been the wheat trade. That thing's just been insane. It's almost better, it is better than even crude oil. But what we're seeing here is a major disruption in these areas. You're seeing international concerns. Everybody's buying U.S. crops right now. And, I get that they're somewhat, they're storing them for long-term are hard. You need to move this product. But is that actually a security issue here for the U.S. to just let everybody buy all of our grains and then we ship everything out? And, is there really good strategic reserves in that? And that's kind of the questions I want to ask David, if I can get him on. If not, hopefully I'll have a conversation with him and I'll be able to share that stuff. But we are looking at a lot of unintended consequences. And, you've got idiots like Lindsey Graham talking about assassinating Putin. I mean, who knows where the trigger is on all this stuff? We're playing with World War III. We all know it. Depending on your location on the planet, it probably feels much more anxiety than maybe in some places, right? But the bottom line is, this is a very serious situation that's going on. And I've been studying, this is not a political channel or geopolitical channel, so I'm not going to go into any deep detail, but I've been studying quite a bit over the last week some of the cases and some of the history around what's really going on out there. And I would have to say, just in a general comment, and people are not going to like this, but it looks like a lot of what's going on right now is the fault of the West. And I'll leave it at that. I'm not going to go into details. Maybe I get a couple folks. I have a friend of mine that I'm trying to get on, and I think can bring in a lot of perspective on that level. But, just saying that this has been brought on by a lot of really bad policies. And now we see the Biden administration actually rumored, I don't know, I'll go rumor, air quotes, that they're negotiating with Iran and Venezuela to get oil from these people. The United States is one of the largest oil producers there is out there, if you can just start to bring that in. And I know all the arguments against bringing the pipeline and all that stuff. You can't disrupt the flow of the Russian oil and expect not to have prices just spike like what we're seeing right now. I have no idea where this thing goes. I watched just in where my office is located, behind it is a large truck and car gas station. And I watched prices go on unleaded from $3.79 to $4.29 when I came over to the office earlier today, and that's in 2 days. So no telling where this is going to go. There's a lot of uncertainty around this situation. I know everybody knows that, so I'm not telling you anything I don't know. It's the only insight that we're going to be able to get is going to be from the technical picture. And I can tell you there's nothing good coming out of our database. I'll show you in a few minutes. Everything looks pretty bad. And as I've said, we don't really own a lot when you look at the overall database, although we still own more stocks than you'd be surprised and you'd think. The individual stocks, I think we're still around 40%. So 4 out of 10 stocks are still showing some trend to the positive trend. Believe it or not, it's not all down. When you look at the overall database of mutual funds and ETFs and all those strategies, it's a much different picture. And that's what I report every night when we go through the database. So there's a lot going on there. So let's just talk. There's one other subject, 2 other things that are going on. The Dow is almost printed at par, 99. See where it is right now, 99.03, up another 0.5%. That's going to continue, and I'm going to cover the Dow tonight as well. And I just think, in spite of the Dow spiking, we're seeing gold. Right? Finally, gold's getting a move. We almost traded 2,000 an ounce. I didn't look at the high-low, but I know I saw 99 and change. So the gold trade that I've been talking about, I don't know, for the last year is starting to happen. We'll go through that as well here in just a few minutes. So let's talk a little bit about what's coming out. There's not a whole lot typical after employment numbers come out. There's not a lot coming on, but this is also, on top of everything else, the CPI is coming out this week. And we're going to get that on Thursday. And Thursday is also one of the bigger earnings days as far as the number of stocks. But as far as earnings this week, I didn't see anything really material. There's a few things, but nothing real material here. There's, I think, roughly 640 releases this week. But we go through, I'll go through the CPI expectations here in a minute, but we're looking at, consumer credit on Monday, 20 billion. I'm not sure anyone's looking at any of these numbers, but I'm going to go ahead and cover them. Wednesday is job openings, really nothing there. 10.92 million job openings, and that's just probably going to get even higher. I would expect that number could go back over 11 million. So CPI is all we got this week from an economic viewpoint. 0.8 is what I'm seeing out there, expectation, month over month, year over year, 7.9 plus. And this might be even a bigger number. We saw the PPI spike, and there's a lag in the PPI numbers coming into the CPI numbers. And of course, now we are 2 weeks away from the Fed meeting as well. And the Fed meeting is going to be very interesting. I always love how the headlines go. This is the most important Fed meeting there's ever been. Well, that it's sort of like every election. It's the most important election there's ever been. So it makes for good headlines. Is it that important? I'm not sure. I'm looking at overnight the 10-year is printing down at 167. That's not what was supposed to be happening right now either, because of this flight to safety bid. So I'm going to go through all of these details here, but that's pretty much everything that's coming out this week. I could go through some of the individual earnings. I don't think it's going to matter. I may have the opportunity, I'm not sure, maybe to do a couple of tweets tomorrow, but it's going to be, I'm just going to be out of pocket, folks. So I apologize. Life sometimes doesn't allow a convenience on all this, especially when you do something daily like this. So let's go ahead and let's dig into the database so we can see what's going on there. So as we look at the data, we're going to see that the daily database is now at 22.47. I'll cover the daily first. There were 621 sell signals, 396 buys. So we don't have a lot of traction there at all. Let's go over to the weekly, and you'll see weekly is now at 14.28. So there's 2,320 symbols out of 16,251 that currently have long positions out there. And as I mentioned, there are over the past week or so, some of the short-term bonds have kicked in. Printing a 167 on a 10-year is going to maybe get some things going. So the good news for those folks that are doing these 60-40 strategies, passive environment, finally the bonds are starting to take away some of the sting of this market. But I think when we go through the technicals here in a minute on the markets, we're sitting here right on the edge, and that was what the title of this thumbnail is markets on the edge. And we just couldn't be in a more vulnerable state in the markets. And I had put out there a number of weeks ago, and it may still play out, that we're going to get, this big sideways range. That was the original scenario. And I think it was a valid one, except for the difference is that didn't know there was a war coming. Didn't know there was going to be major disruptions in crude oil. So these are the uncertainties that the markets present to you that you have to consider as you're going through analysis and trading. And, if there was ever a time where the adage that cash is trash, that is, I would say, adopting that right now would be silly, because right now, if you're US dollars anyway, it's, I know that the underlying inflation is eating away, but to be putting money at risk in this market, there's very few places, and there's only one place that is still good, and that's energy. And probably we'll go through that on Tuesday night. We'll see how everything plays out. We're going to have 2 trading sessions before I get to talk to you again. So I'll do like I said, I'll cover some things. If there's anything I can say on Twitter, I will do that. So let's go ahead and take a look at the S&P here. So as we look at the S&P, we're seeing it down 72 points right now, 42.55. You folks remember the number 42.12. That's still the pivot number. We did print down to 41.01 2 weeks ago. That was the low on the 24th of February. And the other thing I'll do, I'm not going to go through it tonight, but I am going to do a longer term analysis, because we're coming into the final month of the first quarter. I just want to mention this just for a second here, is that is going to be significant, because we closed lower in the first quarter, which right now looks like probably a 60-70% probability. That's going to signal the potential, going back to the video when I was talking about the big reversal pattern. If you go back probably 5-6 weeks ago, I'm going to revisit that thought process. But what it's telling us is that we're getting a quarterly reversal. The last time we had anything like this was potentially maybe 1974, and going through a pretty major bear market. You look back on the charts and look at 1974, it doesn't look that devastating. But I can tell you, my early mentor that I had in the markets grew up in that era. He started in the markets in 1979 and grew through the 74, and you had to hear the old war stories. I wish I was thinking about some of the things that Frank told me many years ago, and I just like, man, that it was a pretty brutal period. But out of that came a lot of opportunity. So this is a whole different world. There wasn't any potential world wars. Hopefully this thing gets diffused and we don't end up in that mode. But just looking at this chart here, this is the daily. We're almost trading right now at, we may have hit it, let's see, 44. Let me get the right numbers here, make sure I get the right mark here. So this is the daily S&P. We're looking at right now the lows being 42.52. We're trading exactly at S3 right now. So S3, 42.52.75, the extreme 42.29.75, and that's going to be very interesting to see what happens there. I have, boy, there's just so much I want to talk about, but I could spend probably 3 hours with you folks tonight. There's just a lot out there. So maybe I'll start earlier on Tuesday night. And the good and bad is we start daylight savings time next week. I'm in Arizona, so we don't change our clock. So the broadcast will actually move back an entire hour. I'll be able to start this earlier. But I may go into a couple things that we're going to need to look at as far as going forward here. But this pattern is dangerous. I'm going to draw in a couple things and spend a few minutes both on looking at the daily and then going to the weekly patterns here that I think you're going to need to consider as you go through this week. And I'm spending a little extra time just because I'm not going to be around tomorrow night to update like I usually do. But this pattern that's unfolding here, and we were unable, I'm just drawing a down arrow here. This is a 21 period moving average down. PPM1 right now is at 0.25. It's in trend mode down. And that's significant, meaning that's going to be the cap of the market way up at 44.28. That's so far away it's not even worth mentioning. But the pattern that is likely to unfold here is suggesting we're coming down to these Fibonacci projections that I'm drawing in here. And those numbers are 40.59. I've talked about this number before. A close under 42.12. We've not gotten that over the past 2 weeks. We challenged it. Like I said, we get down to 41.01, but this is your target range as we come into there. That is going to be the swing projection here. And as everything, just because of the environment we're in, the markets are so emotional that things can get way overdone, just like with the crude oil right now. I'm not necessarily saying that they're overdone, but I'm saying that they're spiking at levels we wouldn't have imagined 4 weeks ago. So this pattern here is significant. Let's go over to the weekly just so you can get a little bigger perspective here. And the weekly chart, we look at the grid for the weekly. We're looking at S2 42.23. S3 is 41.70, 41.20. So just to trade within the expected volatility range for this week suggests that we could see down in the 41 handle, potentially almost 100 points from where we are right now. And we're seeing massive acceleration on the intermediate charts here. PPM1 minus 0.12, 0.21, and PPM3 is just starting to roll over, but we're also getting the crossover of the 10-week and 20 and 40-week moving averages, and that suggests that we're starting to get all the moving averages to start to realign themselves into a true bear market. Like I said, I would go through this on Tuesday night. I want to see Monday, and we'll have the opportunity to see Monday and Tuesday's action. And then I will bring up some of the quarterly and do a long-term presentation on the markets. But right now, you've got plenty of information. There's potential for that 40, 59, and 38 handle. And I've been talking about these numbers for a while, so these are by no means any numbers that I haven't discussed before. These have been in play for a while. Just on a daily chart, not being able to get over that 21 period moving average is substantial. A lot of times you've heard me talk about on the channel where there's a demand line, especially in an uptrend. Well, typically the 21 period moving average tends to be a demand line. Well, in this case, it's now a supply line because we're in this negative formation. And this is, we're not going to get out of this very easily. And, just kind of flashing back for a minute to our database viewpoint, it takes a while when we get into a mode like this to turn that database around. we're still getting, like I said, we had 1,314 sell signals on Friday night. So we're still seeing liquidation. The worst cases that I've seen over the years was 2008. We got down to 6%, but we are printing levels right now that you might expect that we would have much bigger, we would be down more than we are right now. So the participation from a trend viewpoint on the upside that's going to support the markets are becoming very weak. The only positive thing is there's a fair amount of stocks that are still in some uptrend, so that's going to be a stabilizing factor. But if this thing rolls over, like I said, we're down 70 handles right now. We start to print through this 42.12. We're going to head down to some pretty big numbers, and I suspect with the Fed meeting in the next couple of weeks, I don't think we're going to have anything good. These guys, just on a note on the Fed, they are stuck. There's no way out for them, and you've got just absolutely, you've got a war going on. You've got probably the worst administration next to maybe Jimmy Carter that I've seen, and I will admit, I put my hand up. I voted for Jimmy Carter. I was in college. I didn't know any better. But I also was turned into a Reagan Democrat. I went from there. I grew up in the Democratic Party, for what it's worth. But the point is that we're at that point where these policies that are being presented have gotten us to this point in the world. And, I'm not sure what comes out of this, folks. So no one knows, right? So let's go ahead and let's move on to the NASDAQ. The NASDAQ, I don't even know where to start on this. I mean, it just gets worse and worse. I think with some of the elements that are starting to come out, it's becoming obvious that there could be not only a fighting war in the Ukraine, but there could be actually a real major trade war that would really disrupt things. And what we're seeing here in the NASDAQ, we're down 2.13%, down almost 300 points right now. And we're seeing massive acceleration. This is the weekly we're looking at, by the way. PPM1, 1.89, 0.49, and PPM3 is just starting to roll over. But if you look at the formation of all of these PPMs that are on here, we're getting massive. This is a big time downtrend. And this is not going to turn around very quickly. Even if we were lucky enough to hold the numbers, that low that we printed just a couple of weeks ago was at 13,025. Taking that out, there's no current Fibonacci projections to the downside. And we have to go out to the monthly, which I'm going to do next, to try to come up with some concept of what might be out there. So here's what's happening, and I think this is probably the most revealing chart that I'm going to show you tonight, is that the potential to close under the 21-month moving average. Now, the good thing is the current PPM is 1.21, so that suggests there is some support, and we're likely to stay above that number. And it's just now, the 6th of March, so we have to go through the entire month. And this number is not going to change much. We look at the potential here from just a market grid standpoint. We're looking at S2 is, now this is monthly. S1 is, we're through that already. S2 is 13,184, 12,663, and extreme 12,194. And there is a major pivot in this pattern here, and that pivot is 11,961. Below that is all I have to say about that. If we were to take out that number, then we're in a full-blown crash. I will call it a crash. We're in a full-blown issue, and we're going to see basically like a .com where we could end up back at, somewhere between 10 and 9,000. I know the trolls are going to get me on that I said that. But listen, this is what's potentially out here. This is a monthly pattern that is so big and has so much power behind it. It is going to be substantial. That's if is closing under the 21 period moving average, 1303 right now. So we close under, we'll just call it close under 13,300. That's going to be a big time warning signal. It's not even going to be a warning signal. It's going to be a signal to head for the hills. And as far as our database goes, we're basically in the hills, okay? We don't own a lot of things. Most of our portfolios have a lot of cash in them. And, we have one of the primary strategies that we use that use 5 ETFs. They've been in cash, I think, since December the 27th, I think it was. So all this year, so it's missed out on all of this downside, just 100% in cash. And there's a fair amount of our institutional accounts that use that as a core. And it's just not, it's just not good out there, right? So our job is to continue to make sure what risks are out there. There's no, what do they say? There's old traders and bull traders, but there's no old bull traders. Don't try to get too tricky here and try to think you're finding the bottom. It may happen. If it does, that's wonderful. That probably means they've diffused this whole situation in Russia, and that's a good thing. So the next market we'll look at is the Russell monthly. Let me reset this range. There we go. Russell on a monthly basis, I'm just going to stay with this secular trends here for a minute, but it's rolling over as well. I've been talking about it being relatively strong, but we're trading, the NASDAQ and Russell seem to be trading very similar from that standpoint. There's still quite a bit of upside on the PPM2, 1.33, but PPM1 is down minus 0.121. So we watched the whole year last year just kind of roll over there. I'm going to flip all the way to the daily here. And I've been talking about this pattern probably virtually, I guess, going back to the beginning of February, that we keep trying to move this market in a more positive mode. I thought we might get to the 200-day, but now we're starting to see further deterioration, and the key number is going to be this low right here at 1894. So this is the daily cash. Let's take a look at the RTY just for a minute. We're down 2% here. RTY on a daily basis overnight here is trading just about down to RTX 5340. We're trading S3 1952.50. So maybe we're seeing the lows overnight. We've seen this a lot. It's going to be tough to make that call, but we are trading on what I would consider to be major support intraday. And I'm just going to flip this over to the weekly for a second here. And weekly, just from, this is overnight, this is the Russell futures. We're looking at the low 1953. We're trading just about S2 weekly. So there potentially is some support in these indexes here. And this is one of those patterns that we're just going to see really unfold in this, I guess, in this downward slope here, and challenge some of these key support levels. And the key level that I would keep an eye on will be, use the S&P as the trigger point. That 4212 on the futures is going to be the number I'm watching to make sure to see if we're going to get any kind of major, signal on the downside. And that's, we may manage to get a rally out of here. Like I said, they could come up with a ceasefire. A lot of stuff can happen. But regardless of what happens right now, I'll just make this comment. Things are going, it's going to take a lot to recover from this. From a psychological standpoint, market sentiment is going to take a ton to get through this and to be able to reconcile what's next on this planet. And, especially with crude prices and everything that's happened, this is not going away anytime soon. And that's what we're going to have to deal with here. So next we'll cover the 10-year, and the 10-year just kind of rolled over. We went back under the 200-day moving average. That's right now at 1775. The last I looked, let me get an update here on the 10-year, and we're looking at right now overnight the 10-year is 169, and it printed down to 167. So there was quite a bit of buying in the treasuries. And like I said, this is a flight to safety trade. There's no doubt about that. And none of these trades, folks, can you determine where the low is going to be. We're going to hang with the technicals, but when you look at right now, 165 is the 21 period moving average, but there's something going on here. Is all of a sudden PPMs 1, 2, and 3. Look at these PPMs on this chart. I just put a cursor there for a second. These things are rolling over. The momentum is being signaled that there's about a 40% probability at the moment to take out the 21 period moving average, 165. Like I said, we've already printed 167 overnight. So that's a possibility. But we're looking at even PPM 3 rolling over, and even the 200, the WaveTech 200 at the bottom, that is actually signaling for everything to turn south. So we're supposed to be, think about this, we're supposed to be in this era that interest rates are going to go up. And, I've argued all along the Fed's going to continue to raise rates. What might happen here is we may be looking at a signaling of a major recession, maybe this trade wars, all this disruption, prices, stagflation, you name it. You can come up with a whole lot of things as far as what's likely to happen here, but none of it's good, right? So hopefully when you start to talk about these things, they tend to be overplayed. I'm not sure we're overplaying anything here. And you just have to be very aware. And like I said, I'm just telling you folks, be very cautious. That's why I show you our database every night. We've been in what we call a protect mode, otherwise protect capital, by having more cash than we have investments. Most of our strategies, at least 60%, 40 to 60% range in cash, some 100%. And that's just how you should be positioned right now. There's no way to get involved in this market and do that. Now, there's a couple places to be. The energy stocks are still in play. And we also have, some of these other, what I haven't had a chance to research. And like I said, I'm hoping to get a hold of my old friend and my old boss. And I would love to have a conversation with him on the internet about what's going on with the grain markets and what the potential is there. Because think about this, we're about to come in the U.S. growing season. What do you have to do? You have to plow. You have to plow the field. So I'll go through that in a minute. But these rates are potentially should hold around 165. Next level after that's 152. I mean, I didn't say. Sometimes you go, didn't see that one coming. That's what we're talking about here. And if that happens, that means things have deteriorated and we're looking at a huge flight to safety and something bad has went on from that standpoint. and treasuries are still the place to run. U.S. Dow is still the place to run. I see all these stories out there about the demise of the Dow. It's not happening at the moment, and it's still the only place to run to at the as we go through a crisis like this. Okay, I'm going to go through the U.S. Dow next. So we look at the Dow. This is the weekly chart again. Massive acceleration, 0.36, 0.25, 0.23 on ppm 1, 2, and 3. Those are all trend levels on an intermediate basis. We have Fib targets right now, Fibonacci targets up at 102.03, 104, 106. And telling you, if we print these numbers, you have to go back. This is interesting enough, going back to March 20th, we printed 102.99. Of course, everything faded in because the Fed stepped in after that and steepened the yield curve. I didn't go through the yield curve tonight, but I can tell you it's still maintaining. And in fact, it was able to steepen a little bit. Please, please, please don't watch the 210s because they're worthless to watch. They mean nothing. Watch the 530. And that's what you want to pay attention to. So I didn't go through that tonight. But the Dow, this is a massive move. And it's also something else. The move in the Dow is actually more methodical. It's not a spike like what we're seeing in some of the other rates. There is actually underlying trend growing here. And it's not, and like I said, this is a weekly graph we're looking at. That's all we're going to look at tonight on this. But we're getting these Fibonacci targets. We've got nice steady trends. The support levels are down around 96.5, 97. But even if we printed back there, that probably, if we printed back a little bit on the Dow, we'll probably see gold explode even more than it is. But this is these targets. We got positive trends. They're really in place here. And, I talked to you folks about this before, is really what I look at is doing some reverse fundamentals. If this is going to happen, we're going to 102. What does that mean, right? What would cause that to happen? So I would suggest that the treasuries are going to 150 and there's a big flight to safety trade that goes on out there. This is suggesting that things are going to get a lot worse before they get better, is what I would argue. When I do some of this analysis, I'm sitting here secretly wanting to be wrong. I'm just trying to look at the probabilities. The whole idea of these PPMs and everything that I put out there, this concept, is about probabilities. And the probabilities are continuing to build toward higher prices on the Dow. And like I said, we're probably looking at least 102 and the possibilities of 104 plus. And we'll just watch this unfold. But that just tells me, after looking at the treasuries, seeing the overnight action printing down to 169, 167 on the treasuries, seeing a bid here in the Dow overnight. What was the high here? I want to look at that. 99.21 has been the high so far. So we're basically trading just off the highs here on the Dow. Just sticking with the weekly charts right now. And it's interesting that the way things look, typically you got a strong Dow, you've got interest rates falling like that. This is not what crude oil looks like, but we know why crude oil looks like this. You're taking and disrupting a major player on the planet, and you're trying to reorganize the flow of oil. And this is we'll call it the spigot can be turned on, it doesn't turn on very quickly. So I'm not sure where gas prices go. We could see, ultimately, we might see $5.5, $6 plus. And sorry for those folks in California because they have so many taxes on everything, be $7.50 plus out there. And that just hurts, the people that can't afford it. That just hurts the poor just the most. And it's almost, it's just interesting. I wish I had the time to just go into some of these scenarios. But what we're seeing here, this is a crazy explosive trend. Like I said, we did print up to 130.50 was the high. The last 124.63. Let's go and take a look at the daily. You'll see the spike a little more pronounced here overnight. We've traded above RTX, and we're definitely getting into that mode where maybe we're putting in some kind of climactic high. But look at the PPMs here. This is pretty insane. PPM 1, 3.19, and this is a daily chart. You don't see these kind of numbers normally. You usually stay in the sub like 0.25, 0.56, something under, not a whole integer, like where you're going to go through a whole number where it's 1.72, 3 point, you don't see these numbers. And when you get this, look at all of these PPMs on this chart. Now, they do get, I wouldn't say they get overbought, but what they do is they get to an extreme, and then what happens, we have to catch up with the moving averages will continue to rise, and probably now somewhere between 106 and 110 is going to be where the support's going to come in on the short-term level. And so this is important to take a look at here and have a perspective of. So like I said, as I covered this, over the last several days, there's no way to predict where this is going. And we're in this parabolic curve. It can continue. The hope is that we'll get some some consolidation here, and that would be good. It's very, I talked about this, the whole idea back in the State of the Union address, which just about everything that Biden said, if he does, will screw everybody on this, right? It's just there's nothing good that came out of that man's mouth the other night. And especially they're going to look, put some reserves out there. There's like 1 day of production. That's not going to have any effect. And they're just trying to do this. I talked about this before, going back into the early 80s and Paul Volcker days, as the currencies were just going crazy, and everybody was trying to intervene on currencies. Well, currency market is the biggest market in the world, right? Everything's based on currency. So when you start to get into those markets, you don't flip those markets either. And I don't I'll cover the U.S. Dow, and the Dow index that I went through just now is heavily weighted toward the euro. And I talked about this before, but the euro's already down to 108. This is where I was talking about it getting to. We're probably looking maybe at 103, 104, 103 on the euro. The possibility of trading par is very likely if this thing gets out of hand, because the money's going to the U.S. dollar right now. And if they defuse something, there's some kind of ceasefire, something happens, then that trend would change quite a bit from that standpoint. But this is where the money's going, and this trend, like I said, probably on crude here, we're going to go with like a 108, 112 range, just kind of updating that number from the standpoint of where the support levels are going to be. Next market I'll cover is gold, and gold continues to just skyrocket. This is the daily. We're already trading above RTX. RTX was 2,000 even. We printed up to 2,005. Seemed somewhat crazy several weeks ago when I was starting to get I'm going to go to the weekly chart here in a minute, getting these crazy numbers up at 2070 just on a daily. 2149, almost 2200 is the current fib projections here. We're seeing amazing numbers come out of this, out of the ppms. Let's flip over to the daily chart here, or the weekly, I'm sorry. And same thing, almost like with the crude oil, we're seeing this massive move up. So very seldom do we see the US dollar and gold going up together. But the reason why this is happening is people are finally starting to run to gold, and we're also seeing that flight to quality to treasuries. Therefore, the US dollar has got a bid in it. Treasuries have a huge bid, and gold has a huge bid. Ultimately, these markets will separate each other, and we'll start to see some other things going on, unless, like I said, with all this stuff, at least the fear factor in the markets are quite high from this viewpoint. So I'm just looking at the weekly trends here. I'm going to flip the chart over to a daily, and going back to there, like I said, there's 2075 going back to weekly right now. There's no current longer term Fibonacci targets right now. Right now, we've actually are trading, let me bring that up on screen here. 2011 is the high target out of this pattern. This goes back to being calculated on January 14th is when these signals came out for the Fibonacci range on the upside. So we're satisfying that. And we've got a lot of cluster of numbers up here. Let me go back full screen. You can see there's quite a few projections up here, 2015, 2072. All of these dots, yellow, blue, and red dots that you see here, those are all coming out of this pattern that's been unfolding for the last year. I'm going to go over to the secular chart. And there are some, this is an old calculation, but well, it's not calculating right now. There's still some validity in it. 2274, 2500, I'm rounding off, and 2640 are a swing objective that could come into play. And we still, believe it or not, we now have positive trends, 0.44, 0.39, 0.95 on the monthly. So these are big time trends. But if they're going to get, I talked about this a few weeks ago, what we're really looking at is something very similar to what happened around 08 and 9 when we went through this period over here on, as I move the cursor around, we went into just about a 2.5 year run. I'm arguing that, I'm going to draw this in real quick. I'm making an argument here that the trend is what's unfolding here is a pattern like this, and now we're in this next pattern, and the swing objective could be a lot. You know, I'm sounding like Peter Schiff right now. I'm sorry, but he maybe after all these years he'll finally be right. But you know, timing's everything, and you know, while there was a lot of times back here in 2018, all that was a good time to buy. We're still, if I'm right about this pattern that's unfolding here, this is the beginning, and we are just now seeing the breakout from that standpoint. I'll leave this up for the moment. This is Bitcoin, the final market I'll cover tonight. Bitcoin is sitting right on its 21-month moving average, so there's some pretty substantial support here. It's interesting that Bitcoin is not a player in this scenario, and it continues to be part of the risk-on, risk-off asset class, and right now it's definitely off. We're trading down to 37. Let's go over to the weekly just so we can get some idea of what's going on here with these trends. I talked about this the other night, is if we start to break down, all of a sudden we're right back into the potential of 34 to 28 on the downside, 34,000 to 28,000. And we're starting to see all the PPMs roll back over. Everything started to look like we were going to get some type of move. I talked about these upside patterns here that were coming into play. That's off the table now, especially with everything turning south. And the very last place where Bitcoin has to hold is at 34,090. We went through the 40,000 support I talked about the other night. There's just nothing there, and folks are not looking at this asset as an asset class for an alternative asset to anything. It's just risk on, risk off, and there's a lot of effects here going on from the standpoint of some of this cancellation of the Russian government that's going on. So just some final comments. If you came in late, please watch the replay. There will not be a broadcast tomorrow night. Next time you'll see me is on Tuesday night. And those of you in the live room, remember, no live room tomorrow. It'll be Tuesday, Wednesday, Thursday, and we'll go from there. Just want to make a comment here as I close out this broadcast tonight. This is probably one of the more crazy times in history, just with everything that stacks up. If you go through everything we've been through in the last 2 years, now we start to see this deterioration of the world economy. We are potentially going into some sort of major recession, and I'm going to share a thought with you here at the end of this broadcast that I came up with. And I believe, like I said, I'm not a geopolitical expert, just from what I've been able to read. It looks like China, while they're trying to denounce what's going on in Russia, they're not really. We know that they're sitting there potentially thinking about doing something in Taiwan. And if Taiwan were to go, that changes the whole Pacific all the way down through South Pacific Sea, the whole bit. That is a world changer. And so we're potentially watching a major historic event, which ultimately, if they started to put any kind of sanctions and things against China, I would challenge anyone to find something on their desk, like iPhone, right? Something that's not made in China. And that you think there was a supply disruption from that. If this thing continued to escalate, I made this comment early on in the broadcast, we're looking at something much different than some war and economic situation. We're looking at a serious supply chain disruption, and there's no recovering from that if things got too out of hand. So I'm not predicting that. I'm just saying there's some really scary things out there, and that fear factor, there's nothing better than fear to keep these trends that I was talking about tonight, the US dollar bid, the treasury bid, gold. Some of these elements are going to be good, and still crude oil. That is one of the sectors that have done really, really well. And I know some of you were asking about the hack, the XLE hack that we did. That thing's probably going to be up 25-30% already this year, just running a portfolio of these stocks. We took the XLE stocks and broke down what's inside that ETF and put them inside of our models. If you want to find out how to get to it, you just go to Kindle Report /WaveTech is one way. All these things are built in there, and you can. It's early in the month, but you can sign up there and find out how to get more of that stuff. So do that. Make sure you subscribe. Make sure you like these videos. We have quite a few people here tonight. I really appreciate everybody watching. Apologize for not being able to be here tomorrow night. I love my job. I love what we do. You know, we manage quite a bit of money in the markets from the standpoint of institutional portfolios, and we're just looking at, trying to get through every like everyone else. But we're now looking at, a substantial amount of risk in the markets right now. So be cautious. Trade. Don't get too deep into a trade. Maybe we'll get lucky and get one of those giant reversals and everything will turn out to be okay. Doesn't look like that's what's going to happen. Anyway, folks, thanks again. Subscribe, like these videos. I will talk to you on Tuesday night. Thanks a lot.